Good morning, everyone. Happy Thursday and happy Canada Day to all of you wonderful Canadians out there. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before that opening bell. We'll be covering exciting stock market news, notable earnings reports, as well as the morning's biggest gainers and losers. Just before we get into that, don't forget that tomorrow, Friday at 12:30 Eastern Standard Time, Richard Allen and I will be doing a live stream of our market recap. So make sure to put that in your calendars so that you can jump in on the discussion of all the exciting things that have been happening in the market this week. And of course, if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. All right, let's get right into this morning's exciting stock market news. U.S. stock futures are mixed this morning, with Dow futures being up 0.07%, S&P 500 futures being up 0.02%, and the tech-heavy NASDAQ down about 0.2%. PayPal has launched its digital point-of-sale solution, Zettle, here in the U.S. Zettle is to help small businesses manage in-person and online transactions efficiently. With the increased adoption of digital payment solutions among customers, Zettle is expected to allow small businesses to streamline their payment systems and make them more efficient. Furthermore, PayPal's wide partner network is likely to ensure suitable interoperability of their Zettle accounts with their other digital payment accounts. Analysts rate the PayPal stock a strong buy with an average upside of 9%. WOW, or Wide Open West, has agreed to sell 5 of its service areas in 2 separate deals that total nearly $1.8 billion. Shares of the broadband service provider soared to an all-time high of over $21 after the announcement. Both deals are expected to close in the second half of the year, subject to certain closing conditions. Their CEO said that the divestiture of these markets will enable us to reduce our debt as we continue to execute our broadband-first strategy, including pursuing our edge-out and greenfield strategies and expanding our commercial services. Their stock comes in with a strong buy rating and an average upside of over 18%. However, if we look at the most recent ratings within this last day, they range from 20 to 44% upside. U.S. casino entertainment company BALY has announced that the proposed business combination with Gamesys has received approval from shareholders on both sides. The combined entity formed upon the integration of Gamesys' premier gaming technology with BALY's expanding U.S. gaming platform will be better positioned to tap the growth potential of the rapidly growing U.S. online sports betting and iGaming market. The chairman of BALY's board of directors said that by combining with Gamesys, we will meaningfully accelerate our growth strategy to become a premier global omni-channel gaming company, which we believe will create significant long-term shareholder value. Analysts seem to agree as the stock does come in as a strong buy with an average upside potential of over 33%. Chinese EV company XPEV has announced pricing details for its global offering that would see its stock be double listed in Hong Kong and the US. It has priced the offering at 165 Hong Kong dollars per share and expects to raise more than 14 billion Hong Kong dollars in gross proceeds before deducting offering costs and underwriting fees. But it could raise more than that, as it could issue an additional 12.75 million shares to cover over allotment. The Chinese EV company plans to use the money from the offering on a variety of programs. It outlined expanding its product portfolio, upgrading manufacturing facilities, and increasing capacity. XPeng's Hong Kong listed shares are expected to begin trading on July 7th. The offering will be based on the ratio of 1 New York Stock Exchange listed XPeng share being equivalent to 2 Hong Kong listed shares. Their stock comes in as a strong buy with an average upside just over 12%. French telecom company Orange plans to launch their first fully cloud-based 5G network test this month. The operator is moving towards what it describes as a zero-touch network and says the pilot will be a blueprint for the next generation of networks that are more efficient and agile. The test network will be fully automated, 100% software-enabled, and data and artificial intelligence-driven. Orange plans to run the cloud-based 5G network test for the next 2 years. It will use the test to better understand the full potential of data and AI. Analysts are a bit more divided as the stock does come in as a hold, but has an average upside potential of 26%. Now let's take a look at some notable earnings reports. Starting off with Micron Technology, who reported strong Q3 results that improved greatly year over year and came in ahead of analyst expectations. Revenue jumped to $7.4 billion from $5.4 billion a year ago and topping consensus estimates of $7.23 billion. Their adjusted earnings per share of $1.88 beat consensus estimates of $1.71. The company issued fourth quarter guidance calling for revenue of $8.2 billion with a possible deviation of $200 million. At the same time as releasing the Q3 results, Micron also said that it has reached an agreement to sell its Lehigh factory to Texas Instruments. It expects to unlock $1.5 billion in economic value from the sale, and the amount includes a cash payment of $900 million. Analysts rate the Micron stock a strong buy with an average upside potential of 40%, with many of them reiterating their price targets today. We also heard from Bed Bath & Beyond, who did report better than expected revenues but missed on earnings. Yet the company did raise their full fiscal year guidance based on the current quarter's strong performance. The company reported adjusted earnings of 5 cents per share, missing the street's estimates of 8 cents per share. In the prior year quarter, they had reported a loss of $1.96. Their net sales climbed 49% to $1.95 billion, passing analyst expectations of $1.87 billion. Analysts don't seem to be convinced though, as the stock does come in as a hold with a downside potential of nearly 18%. They did get one buy rating today with an upside of 32% though. And just this morning, we heard from Walgreens Boots Alliance, who did have results that exceeded expectations. Their earnings per share came in at $1.51 versus the $1.17 expected, with revenue coming in at $34.03 billion versus $33.76 billion expected. They posted a net profit of $1.38 per share, compared with a net loss of $1.95 per share than the prior year. Analysts rate their stock a hold with an average upside of 11.5%, and we've yet to see any analyst update their price targets since digesting the earnings report this morning. Let's take a look at which stocks are this morning's biggest gainers and losers. Our biggest gainers this morning are led by Alterity Therapeutics. Trading under the ticker ATHE, they're currently up 69%, followed by Berks & Mayers under BGI, currently up over 50%, and Wunong Net Technology under WNW, currently up 46%. Our biggest losers this morning are led by Borks Technology. Under the ticker BRQS, they're currently down nearly 18%, but this was following a gain of 45% yesterday. Followed by Newegg Commerce under NEGG, they're currently down 14%, following a gain of 78% yesterday. And CureVac under CVAC, currently down about 13%. So that is everything for Thursday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you enjoyed today's video, please hit that thumbs up button and say good morning in the comments down below. I always love hearing from you guys. And speaking of hearing from you guys, don't forget to tune in for our live stream tomorrow at 12:30 Eastern Standard Time to get in on the discussion of all the exciting things that happened in the market this week. Thank you guys so much for watching. I hope you have a wonderful day, and I will see you back here next time.